Okay, so the third step in the accounting cycle is to prepare an unadjusted trial balance. So the first step was to recognize, measure, and journalize transactions. The second step is to post those transactions to the general ledger. And then the third step here is going to be to prepare an unadjusted trial balance. The only reason we prepare a trial balance is to make sure that our debits equal our credits. That's the only reason we prepare a trial balance, to make sure those debits equal those credits. If the debits don't equal the credits, then we made a mistake. However, just a little caveat there, just because your debits do equal your credits doesn't mean you didn't make a mistake. So the steps for getting ready to prepare the trial balance is going to be to go into our ledger and list out all the different account titles and the various balances. Then we total up the debit and credit columns and make sure the two equal. So here's an example of what a basic trial balance might look like. So again, we would give it a header, the company name, trial balance. This is as of a specific date. It's telling you this is what our balances are on this particular date. Then we go into the ledger and we find all of our individual accounts that actually have balances and we write them down. And then we're going to put the balance directly from the ledger into our trial balance here. So if cash had a $15,200 debit balance, we will write that in the debit column. Advertising supplies, $2,500 debit. Notes payable here had a $5,000 credit balance. So you're just taking that information from the ledger and writing it down, and then we want to make sure that our debits end up equaling our credits. And if they don't, as I said, you made a mistake. So there are a few limitations to the trial balance. As I mentioned to you before, just because it does equal, debits do equal credits, doesn't mean that you didn't make a mistake. For example, we may have forgotten a journal entry altogether, or we didn't post it from the journal into the ledger, in which case it wasn't recorded in the ledger. Maybe we posted the journal entry twice. That would still make our debits equal our credits. Or we used the incorrect amounts, or perhaps we recorded it to the wrong transaction. So if you do find out, you get down to the trial balance and you realize that your debits don't equal your credits, there are a couple things you can do. Go back and make sure that you correctly added the trial balance columns. You correctly added up the debits and you correctly added up the credits. Then make sure that your account balances are correctly entered from the ledger, that we didn't make a mistake copying from the ledger into the trial balance columns. Make sure that you didn't put a debit in the credit column or a credit into the debit column, that they're in the correct accounts. Recompute each balance in the ledger then, so you'd have to make sure that you correctly have the right balance there. Make sure that we've posted each journal entry correctly and that each journal entry has equal debits and credits to begin with. So there's a few different steps that we have to go through for that. Let's run through a quick example of how to prepare an actual trial balance. So the starting point is actually going to be the actual trial balance, which, well, as the ledger account balances, I guess I should say. So this information is pulled right out of our ledger. So it's not telling us whether we have debits or credits here, so you kind of need to know what kind of balance each of the individual accounts carries. And I'll tell you really quickly. Revenue carries a credit balance. Prepaid rent is an asset, so it's going to carry a debit balance. Accounts payable is a liability, so it carries a credit balance. Equipment is an asset, carries a debit. Dividends carry a debit balance, even though they're equity. Utilities expense also carries a debit balance. Notes payable will carry a credit balance, that's a liability. Cash is an asset, it will carry a debit balance. Rent expense, part of equity, carries a debit balance, and common stock, also part of equity, carries a credit balance. So now what we just go through and we list all of those individual accounts out. So we usually start with the assets. So the first asset, typically cash is first. So cash has a $16,400 balance. We're going to go ahead and take that information and then we will write that in each location here, and we'll carry that down into our trial balance. And then we will do the same thing for the next asset that's available. Looks like prepaid rent, so we would have copied prepaid rent down and That also carries a debit balance. Keep going. Equipment is another asset, $19,000 debit balance. Accounts payable carries a $1,000 credit balance. We had a quick discussion about that a second ago. Let's see, accounts payable carries a credit balance. Notes payable, $10,000. Just take that, write it down here, carry the balance, it carries a credit balance, and so on and so forth until we listed out all of our different accounts. Let's go ahead and delete that. All of our different accounts and whether or not they carry debit or credit balances. And then we're going to go ahead and sum all those up. So we're going to take all these debits and we're going to add them together. And when we do that, we get $115,900. And we're going to take all these credits, we're going to add them together. And as you can see here, we get $115,900. So far it looks pretty good, like we've done everything correctly. Hope that gives you a better idea of how to handle a trial balance. Thank you.